Bitcoin has continued to correct, dropping lower than many expected. Corrections are nothing new, but this is a great time to discuss why the drop is happening and how traders and investors should behave during a dip. You ready? Let's go. What's up, everybody? I'm Scott Melker, also known as the Wolf of Wall Street, and we're here to talk about the continued Bitcoin correction. First, I'd like to ask you to subscribe to my channel and go ahead and hit that thumbs up or like button down below. Now, we're seeing a significant correction in Bitcoin, but how significant is it? Well, as Peter Brandt noted, during the 2015 to 2017 bull market in bulk Bitcoin, there were 9 significant corrections with the following average: 37% decline from high to low. The current correction clocks in at a measly 23% thus far, with the drop from just over 58,000 to just below 45,000. So when I say that this is normal, it truly is. We have lots of precedent, and it's happened many times before. Now, why are we seeing this sell-off? There's a lot of theories. Many have pointed to on-chain metrics that show that F2 mining pool has sent a tremendous amount of Bitcoin to exchanges to sell. That's unsubstantiated, but it makes a lot of sense that a miner would want to take profit at these high prices and take advantage of people who are over-leveraged on their longs. But let's dig into the charts and see what we can find. Today, I'm focusing on the 4-hour chart because I think that it shows us a lot. Obviously, we had this huge wick down yesterday, which looked like it was a likely reversal. It was not meant to be. It seems that someone was clearing the runway, so to speak, to make less friction and less buyers when they were going to sell some more Bitcoin. Not a big deal, just not exactly what we expected. Now, what I've identified here is the drop that we had from January 8th to January 11th. That was a 28% drawdown roughly. If we extrapolate that, and this fractal looks almost the same, if you look at these two drops, and if you extrapolate that to a 28% drop here, that would take us almost exactly to 41,973, which was the very high of that previous drop. Now, what's notable about that is that that was the ultimate high for many weeks, and that resistance was broken and never retested as support. That would be very healthy and very much expected to see something like that happen. So keep your eyes on the area of 42,000 if this continues to drop. And also note that if you are buying in this area, generally we see two things, and it's not price bounce exactly from the line. We either see it price bounce above or that it nukes down below before coming back. So, you might want to spread out areas in that order, but never try to buy exactly on a line. It's never perfect. Now, I want to take a look really quickly at the hourly RSI. We saw that it dropped down to 21 yesterday and came oversold, and now we have bullish divergence with RSI. As you can see here, if you zoom in, it made a higher low, and then again here with a small bullish divergence when price was making lower lows in both of those places. Hourly bullish divergence, not that compelling, usually just good for a scalp or a bounce, but we'd like to see if those can compound on higher time frames. For now, we have no indication that we're going to see bullish divergence yet on the 4-hour chart, which is my favorite, but we do have 4-hour RSI closing oversold. This could obviously drop down lower and do what I'm looking for later, but what I like to look for in these situations, if you follow me, is for price to come down here and make a slightly lower low on a close and head up, while RSI comes through and makes a higher low and goes up. That would give us a bullish divergence here. So that's something that I'll be watching for. Those have been very reliable signals of macro reversals many times in Bitcoin's history, more times than I could care to count. So that's something I'll be definitely looking for. Now let's take a look at the news that's affecting Bitcoin at the moment. First, Bitcoin dips below 48,000 as nearly 6 billion in crypto futures are liquidated. I just touched on that earlier. When longs get extremely over leveraged, they're off sides and funding gets high, it's a very good opportunity for someone to make a whole lot of money selling and potentially to then buy back lower after that cascade of liquidations. The next article we have here is from CoinDesk and says 4 Bitcoin bear signals to be aware of. First, they highlight depleting Bitcoin trading volume. When you see volume decreasing and pricing going up, it means that a trend is likely exhausting and that you're going to see a correction. That's something that we saw. RSI divergence, yes, you know that I love bull and bear divs, although the one that they show here, I do not find that compelling. I think it's over a way too long a period of time with non-divergent action in between, but the sentiment is correct that a divergence can be a very good signal. Number 3, a $2,740 Bitcoin CME gap. Now, that gap is all the way down in the 20,000s. Maybe we will, maybe we won't get there, but generally I view the CME gaps as memes and they are not something that I worry about. You cannot spend your life waiting for a gap to be filled on an asset that trades 24/7, and the gap is only there because the CME turned off buying and selling for the weekend. To me, that is not a true gap. And 4, March is approaching. March has consistently been the worst performing month for Bitcoin, with a mean average loss of 14.725% since 2017 when the market started to gain traction. The second worst month on average is September, with a mean loss of 9.05% over the same time frame. This behavior could be attributed to the upcoming tax year on April 15th in the US and traders selling Bitcoin to cover their tax bills. That's just a theory. I don't know that that's the case, and I'm not particularly concerned about a bloody March, but it's always worth noting as a part of history. And finally in the news, thank goodness, Tether made a deal with New York State and brings a quick reversal of the crypto market sell-off. I'm not sure that's why we saw an end to the sell-off, but it is notable that the settlement over Tether with the New York Attorney General Office appears to remove what might have been a systemic threat to cryptocurrency markets. If you follow me, you know that I did not give any credence to the Tether FUD, but at the end of the day, they paid an $18.5 million fine, which is a drop in the bucket for Tether, almost nothing, and were not forced to admit any wrongdoing. Pretty incredible resolution and an end to the narrative about Tether tanking the market. Thank goodness. Now, here are some to-dos and ways that traders and investors should approach a correction, a bear market, a dip. You can call it whatever you want, but these are very, very important. Number 1, always separate your emotions from trading. Fear and greed are emotions that can lead to irrational behavior. What happens when people are fearful is they tend to sell the very bottom. How many times have you watched something correct, and when you finally decide to sell, that's when price reverses and goes skyrocketing up. You cannot be emotional in this market. You have to separate your emotions from your trading. That leads us to number 2, buy the fear, sell the greed. I have been talking about taking profits for weeks, selling on the way up. That allows me to have the freedom and the power to make decisions with the free cash when there is a dip. You cannot buy the dip if you don't have dry powder. If you are an investor, you should be buying the dip regardless of the price, even if you think that it is potentially going lower, because you believe that eventually the market will trend up and prices will trade much higher. Number 3, take advantage of dollar cost averaging. This is the easiest way to do it. By purchasing coins, regardless of the price, you end up buying them at a low price when the market's down. Over the long run, your cost will average down, leaving you with a better overall entry price for your coins. Markets trend up. If you dollar cost average, eventually every buy should be in profit. Number 4 is really, really important. Do not compare your portfolio to its all-time high. Humans are very predictable. Inevitably, traders look at their portfolio all-time high as the ultimate bar, viewing everything below it as a loss. You are mentally always down. One should focus on the longer-term gain and not the temporary drawdown. Viewing your portfolio as down versus your all-time high implies that you expect to be perfect and sell everything at the dead top. Not something anyone does or that any investor should even attempt. It also implies that you would actually be actively buying back in perfectly after the drop. You wouldn't. Comparing your performance to the best possible outcome with perfect timing and foresight is a surefire recipe for poor emotional decisions. Hindsight is 20/20. Man or woman up, accept you're not perfect and make the best decision possible with the information you have. And finally, number 5 and the most important, hodl and do nothing. Look at the price of Bitcoin. It only goes up over time, like most markets. We're still in the early stage, and Bitcoin and the whole crypto market are young assets. If you believe, like I do, that price will rise, you don't have to do anything during a correction except for close your portfolio and don't look at it and wait a little while until it's up again. Once again, this Bitcoin correction is completely normal. There's no need to panic. Just take it as it comes. Once again, please subscribe to the channel, hit the like button, join my newsletter, which you can read about in the description, and check out my sponsor, Femex, who's still offering up to a $720 bonus for depositing. Thank you once again, and we'll see you soon.